Inflation falls for the first time in more than 2 years. Key U.S. gauge shows due to sinking gas prices. Fed Chair Jerome Powell's inflation remarks trigger market sell-off. Crude oil prices fall while UK energy bills to rise by 80% in October as regulator announces hike. The market is in flux, and while signs of inflation are abating, market uncertainties continue to abound. For more on this and next steps to ride the market, stay tuned. This is Money Talk Sundayz. I am Stevie B. Welcome to Money Talk Sundayz. I'm your host, Stevie B. For those tuning in via your favorite streaming platform, hit that like and share button. You can also subscribe to the Money Talk Sundayz podcast. The link will be in the description box. For those viewing on YouTube, like, share, and subscribe. Now, today's show is going to take a different format than previous shows. We're taking a different turn. I wanted to do a deep dive in FAZE, F-A-Z-E, which is a company that operates lifestyle and media platform in gaming and youth culture. However, those plans were quickly shelved once the Fed Chair Jerome Powell essentially sucked the wind out of the sails of the latest market rally by declaring that the U.S. needs a sustained period of below-trend growth. That will mean some pain for households and businesses, small businesses in particular. But the alternative is far greater pain. So what does that mean, ladies and gentlemen? What that means is the Fed is going to raise interest rates significantly more, and it's pretty much going to keep it up to combat inflation. Now, this news created a market rout on Friday, as well as a mass sell-off. The Dow Jones Industrial Average skidded 4.2% in last week's stock market trading. The S&P 500 fell 4%. The Nasdaq Composite gave up 4.4%. The small cap Russell 2000 lost 3%. Now, Powell's hawkish message was not a surprise. We expected it, but the market did not recover or react as properly, did not react well. The Dow Jones, S&P 500, and Nasdaq Composite fell back below their 21-day moving averages and are now not that far away from their 50-day lines, as well as some big round numbers for each of the major indices. Now, there are signs that inflation is slowing. However, it is these same signs, these very signals that Jerome Powell is warning us about. He stressed the 1970s lesson for policymakers not to let their guard down so quickly. The same way we let our guard down during COVID, and then the Delta variant came, and then the Omicron variant came. Do not let your guard down quickly. The rate of inflation over the past year did drop to 6.3% from 6.8% in the prior month. The core rate of inflation edged down to 4.6% from 4.8% in the 12 months ending in July. It had touched a 40-year high of 5.3% this past February. So, with Jerome Powell's remarks, with the way the market is going, what can we do as investors? Let me keep it short, sweet, and simple, ladies and gentlemen. We may have to pare our exposure, especially if we ramped up in the past few days and are now sitting on some losses. I am sitting on a couple losses, some things I bought into over the past 2 weeks, and then the market pretty much almost fell out. But should the market trend higher, fresh buying opportunities will arise. For example, with Apple, Arista, and Tesla being among the possibilities. Other possibilities are definitely there should the market trend higher. And if we see it trending higher, we definitely want to buy in on the upswing. Now, we should still be cautious, minding the risks of a quick head fake or resistance at the 200-day line. Keep in mind the possibility the market will retreat to the 50-day line or worse. Depending on what followed, such a move could create a number of setups or a challenging period, depending on what happens next. So what do we have to do? We have to read our charts Examine our scans. Examine the stages of these different stocks and where they are at. The only constant in life is change, and change is upon us. It is cyclical. It'll go up. It'll go down. It'll go up. It'll go down. It is cyclical. Where are we at in this stage right now? Examine your charts. Examine your scans. Read these charts. Look at the history. Look at the 50-day. Look at the 200-day. Look at the RSI. Pay attention. Stay focused, stay vigilant. That is what we can do during this market. That is all I have for today. This has been your host, Stevie B, with Money Talk Sundayz. Be careful out there, ladies and gentlemen. It's a tricky trading period ahead of us. I'm out.